Good morning, everyone. This is Dana from Next Gen, and I hope everyone is having a fantastic morning. Well, I am so excited to be able to host the Home Buyers Virtual Brunch Seminar, the Investors Edition. So, what we have for you today is some very good information as it pertains to this environment. So, what I would like to do is one, to thank you for sharing your morning with us, and to two, and two, in, introduce my co-host, Damon Holland. Damon, welcome.
Hey, good morning. How everybody doing? Oh, okay. I thought you were gonna continue on, but good morning, everybody. Thanks for being here. Thanks for joining. But this is gonna be a good informational video. We're gonna talk about the market, of course. We're gonna talk about real estate, one of my passions. Also with Jennifer, loan originator. She's here to answer all your financial questions. She is definitely has a very good knowledge, experience, and hold on what's going on financially. So let's get right into it. We're gonna talk about. I'm starting to talk about market trends, and I'm also talk about give some sellers some tips as far as advice from getting ready. Reason why I'm kind of focusing on sellers is because we just did a buyer seminar 2 weeks ago. So buyers kind of covered y'all. We talked to y'all for a good hour last time. Talk with y'all. I'm talk a little bit about buyers too, but I'm kind of focused on sellers this time. So market trends, what we're seeing, or what I always get asked when I'm out and about is um, from different buyers is I think I'm gonna wait until home prices drop or home prices come down. So let's talk about that. Let's discuss that. When you're looking at the market and you're comparing the market to how the market was 2 years ago, even a year ago, home prices have dropped. They have come down. And this is probably the lowest we're going to see it. And I'm gonna tell you why. Because we are still in a home shortage. There's still low supply on homes right now. There's still a lot of sellers not putting the homes on the market. There's still low, low, so, low shortage of homes for the market right now. The supply is low. So, like I said a minute ago, we prices actually have come down. They're back to you probably heard me say it before, how everything was before COVID. This is the state of the market before COVID. And let's talk about supply and demand a little bit. Supply and demand. Hold on one second. Supply and demand. Since we are low supply, we don't have that high demand. Why we don't have that high demand? Because of interest rates. Interest rates are, Jennifer's going to get into that a little bit, but I think they are around 7.5, somewhere in there right now. So with interest rates being high, that means more restrictions and less buyers coming onto the market. So you have less buyers coming onto the market, and you combine that with a shortage of homes, and that's kind of the state of the market right now. But I will say, for sellers, like I said, I'm trying to focus on sellers and talk to sellers. Some important things you need to do when you are considering selling your home. First of all, get yourself a realtor. Get yourself a realtor who knows the area, who's easy to work with, you're comfortable working with, and of course you trust. Um, know why you're selling. Definitely make sure know why you're selling. I say that because some people need to sell because of their job, because of school. This way, when you know why you're selling, you and that realtor can sit down and come up with a strategy for selling. Some people have time to sit on the market for a whole year. Some people don't. So definitely know why you're selling. Um, some of these going to be real quick tips and points because we have a lot of information to give y'all. But definitely, if you want to sit down with me and go through these details a little bit more, contact information will be in the description. Um, Instagram, Facebook, however you want to contact me. But I can definitely get into a little bit more description of this. So, like I said, know why you're selling. That way, you and your realtor can sit down and come up with a strategy for selling. Um, Realtor, get yourself a good realtor. Realtor, we can also come in and say, Um, Maybe you want to do $10,000 worth of repairs to whatever in your home. You may not need to do it. You may need to only do a fresh coat of paint. And depending on what the repairs are, we can say, hey, this is how the market is moving. This is what's trending. This is what's not. You may want to do this versus that. We can definitely save you a couple of dollars here and there as far as getting your home prepared to sell. So definitely, again, falling back to number one, get yourself a good realtor who knows what they're doing. Setting your purchase price. Setting your purchase price is definitely one of the biggest tips I want to give you. That will definitely cause you to be on the market a lot longer. But again, some people don't mind being on the market a lot longer. They have the time. Maybe they don't need to move right away, so they can set their price differently and move in that direction. Some people may need to move because of their job. They may need to move within the next 90 days or whatever it may be, something like that. So they may want to set their price to be more aggressive coming onto the market and get a lot more eyes on it early on. So again, this is all part of setting that strategy. So make sure you're setting the price. You want to get the highest price, not only the highest price, but the best terms that fit your situation. Highest price doesn't always mean the best terms. So definitely consider all these tips. Those were just a few quick shots, and I did talk about that's one of the big keys right now. That's changing the market. Interest rates. I want Jennifer to definitely hit on interest rates a little bit more as to why we're in the market we are in right now. We have Jennifer Springer. She is loan originator from Table Mortgage. How you doing this morning?
Hey, good people. I'm doing well. I'm doing well. How's everybody out there? Okay, can you? Okay.
So one
So,
of the big things we wanted to ask you about is how are the interest rates today?
yes. So, some people think that it's not a good time to buy because of the interest rates. But in actuality, it's actually a really, really great time to buy because of the interest rates. Simple economics. The when the rates are low, you have a lot of buyers flooding the market. When a lot of buyers are flooding the market, that means you have a lot of competition. With that being said, you're also going to have the price of homes going skyrocket. They're going to increase. However, with the rates being right now in the sevens, if you're trying to get a FHA loan, which is a government loan, or if you're trying to get a conventional loan, Fannie Mae, Freddie Mac, conforming loan, your rates will probably be in the eights about right now. This is a perfect time because you have less competition, less people in the market, and that way, like I said, simple economics. You're able to purchase at a pretty decent interest rate right now where you don't have a lot of people flooding the market. You can still get seller pays or seller concessions or still help from your sellers when it comes to your closing costs. So this is actually a great time to buy now because of the interest rates.
Absolutely. That's just exactly one of the things I was saying as far as buyers coming into the market. That's a perfect explanation and different view of it also. Another big question we get a lot is that people want to know about is as far as what are some loans for non-conventional loans, or what are some loans that homeowners, not homeowners, I'm sorry, business owners can use.
That's a great question. So I love being able to assist and be a great resource for my self-employed, my business owners. So there's several ways that you can go about it. If you're thinking of in the traditional sense, as far as being self-employed, we use tax returns to determine your income. So that means we're going to ask for at least the last 2 years of your tax returns. There are some programs where we only just need the most recent one. But in most times it's the last two. And what we look at that is we get an average of your monthly income coming in. Now, here's the thing with my wonderful self-employed buyers. A lot of them have the benefit to write a lot of expenses off. And that's a beautiful thing when you're self-employed. That's a benefit to you. So that's great. However, when you're trying to purchase a home, when you're trying to get a mortgage, that is not the best practice for a business owner, a self-employed borrower. It's not the best practice for you to write all of your expenses off to where you're showing like you're making really good money, but then after you've written off all of your expenses, you have this little small income, sometimes even a loss. That's when it's not in your favor to do when you're trying to purchase a home, for the simple fact that whatever you tell the IRS you're making, that's what you're going to be making. If that's the situation, it's still available where we can now ask you for your bank statements. And there's a program where we can ask for your 12 months worth of bank statements or 24 months worth of bank statements. And it can be personal or business. And that's how we do what we call a bank statement loan. And a bank statement loan is a non-traditional opportunity to get a mortgage. Keep in mind, because it's a non-traditional out-of-the-box option, interest rates may be a little higher for you. You're going to have to put down a higher down payment. Your credit has to be a lot higher, um, somewhere in the upper 600s. Um, you may have to put 20% down, 25% down, depending on the situation. Everybody's situation is different. So there's no such thing as a cookie cutter mortgage. Every mortgage is going to be different because everybody has a different situation. But in a nutshell, there are a few options for people that are business owners, people that are looking to purchase a home and they are self-employed. We can do traditional way where we go straight on a conventional loan, where we're using your tax returns, and if tax returns doesn't look like it's going to work with that, then we can do a non-traditional option where we do the bank statement loan.
You're breaking up a little bit.
I'm
A
sorry.
few technical difficulties. That was great information, but I'm gonna see if we can get the code.
Okay, could you guys hear me?
Another question was USDA loans. Yes.
Okay. USDA loans, as far as how it works. Can you guys hear me?
Yes, we can.
Okay, perfect.
Yeah,
Um,
we can hear you now.
okay, good. You mentioned something about USDA loans. Was the question involving like how does it work? So with USDA loans, it's a government loan, just like an FHA loan or a VA loan. A USDA loan is a government loan that is backed by the agricultural community. And so that's why a lot of people tend to have to get a property that is USDA approved, meaning that typically it's going to be in a rural area. And so the thing about USDA is it's great for people who make low income. It's great for people that are interested in purchasing a home that is in a rural area. However, it's one of our most conservative loans. And when I say conservative loans, I mean that in regards to debt to income ratio. I know that's one of the things that we talked about the last time we were on here, where debt to income ratio is basically where you're comparing the debt that's on your credit report, which are student loans, car payments, credit cards, any of those things that will show up on your credit report. And we compare that to the monthly income, the monthly gross income that you get every month. Well, for a USDA loan, it's a very conservative number. It's actually, your debt to income ratio has to be low. The lower your debt to income ratio, or the percentage of that number, that basically means the less debt you have. The higher that number is, the more debt you have, pretty much is what it's saying. So with a USDA loan, their debt to income ratio is super, super conservative. It's the most conservative loan that's out there. So a lot of people don't tend to qualify for it because either um, your debt is too high for the loan and you may have to pay some stuff down, or you may have to ask somebody to be a co-borrower on the loan. Keep in mind, with this loan also, your co-borrower does have to live with you, whereas the other loans that we have available, which is VA loans for our veterans and active military, or conventional loans, or the other government loan which is an FHA loan. With the USDA loan, your co-borrower does have to live with you. There is income limits for a USDA loan also. Those income limits are determined based off of the county that you're trying to purchase at. So if there's anybody who wants to get more information about that, it's really based off of the county what that income limit is going to be. But we do help people get USDA loans. It's a great loan program, but it is probably one of the most challenging to get, just because of all of the parameters that they want you to have in order to qualify for that program.
Appreciate that. Appreciate that. So, keep investors. We were trying to answer. I have my LLC, and I'm ready to get into real estate investing. What loan should I be considering, thinking about, or which loan best fits me if I'm a brand new investor and I want to get into buying?
Great question. There are two specific loan programs that you can take a look at when you're looking into wanting to do investment. Um, there's the traditional way, and I feel like there's always a traditional way, and then there's a non-traditional. But the traditional opportunity would be to do a conventional loan. A conventional loan is definitely where you can purchase or get financing for an investment property or a rental property. However, with the conventional loans, you do have to keep in mind of that debt to income ratio again. That's that ratio that compares the amount of debt that you have to the monthly income that you get. Um, so making sure that that number is not over 50%, or for investment, I believe it can't be over 45. So that may be a little tricky if you already have a mortgage, you already have a primary mortgage, you're still paying on your primary mortgage, and you want to get into investment property. So you definitely want to kind of get an understanding of where your debt to income ratio is. You also want to get an understanding about your credit, because your credit typically has to be a little higher if you're looking into investment property. We actually have a great program with my company, Tabor Mortgage Group in Charleston. Where we're offering just 15% down on investment property, which is pretty great. I've had the opportunity to work at other lending companies, and they typically want 20 and 25, some even 30% down. But where I'm at now at Tabor Mortgage, we just need 15% down for the most part if you want to get into investments. Also, we do have below market pricing. Some of our interest rates have been just as low as a primary interest rate. Typically, when you're looking at investment property, your interest rate is going to be a little higher because there's more risk there when you're purchasing an investment property. So that's one option. The other option is our non-traditional option, which is called a DSCR. D as in debt S as in service, C as in coverage, and R as in ratio. DSCR is our debt service coverage ratio. Or if you want a simpler way to say it, you could just say investor cash flow. Our debt service coverage ratio alone. We're not really looking at the debt to income ratio, which is amazing. Why is it amazing? Because that means that if I am an investor and I'm looking to purchase rental property, I can now pay more attention to the property's value versus if I'm making enough money or do I have too much debt, that kind of thing. With this loan program, which again is a out of the box alternative, non-traditional option. Of course, the interest rate is going to be a little higher. Of course, you're going to have to put a little bit more down, possibly 20-25%. And it's just because when we're looking at non-traditional or out of the box options, the risk is a lot higher, right? So when anytime the risk is a lot higher, you're going to have to put a little bit more skin in the game, is what we like to call it. But it's a great program in the fact that you're not having to worry about your income. You're not having to worry about your debt to income ratio there. It's actually based off of the property's ability to pay. So if the mortgage is $1,500 a month on this particular property, as long as the rent is going to cover that, you pretty much have a deal there. Of course, there's some little nuances that go with that. Like I said, having to put a little bit more down. Um, you know, your credit score has to be a little bit stronger than if you went the traditional way. The interest rate is going to be higher. It's interest only payments on that, which is great. And a question may be, well, if it's interest only payments, how do I actually pay off the mortgage? Simple. If you wanted to put some money down on the principal, is not a problem. If you want to pay more than the interest only payment, it's not a problem. But the mandatory payment is interest only, which is phenomenal because typically those payments tend to be a little less. But yeah, those are the two most great programs that we have available, going either the traditional way or the non-traditional way.
Question for you, definitely for my understanding. Are we when you say when you talk about the credit history and the debt to income ratio, are you talking about the business, the LLC, or are you talking about the actual person behind it?
So I'm talking about the actual buyer. Um, we don't have a program where you could actually use your business, where you could actually use your business information when you're purchasing a loan, a traditional loan, traditional mortgage. You have to use your information. However, once you close on that property, you're more than welcome to have the attorney switch that the title from your name to your business name.
Okay, great information. Perfect. Um, is there anything else that you wanted to let us know about Table Mortgage?
Uh, I love the company that I am in. Tabor Mortgage is an awesome local. We are a retail lender. We have tons and tons of products. Um, Nothing is cookie cutter, which I love, meaning that if you have person A has this scenario and person B has this scenario, we can tailor their the product or the program that they need to go on based off of their needs. It's over 25 years of experience in the company. Our processors are actually in-house, which means that I don't have to call a 1-800 number or pick up the phone and call anybody for that matter to figure out what's going on with that particular file or person's loan. I can literally just walk across the room to speak to my processors, which is amazing because I've never had that experience with working with other companies. You always had to pick up the phone and call somebody that was in a whole nother state or a whole nother town. So it's great to be able to have everybody that needs to have their hand on the loan. It's great to have them in the same building as me. That means that the support is there, which is great. Um, when I say we can pretty much do anything, I am not exaggerating. We can pretty much do anything. I would probably say 30 to 40% of our loans actually come from other loan officers, other loan companies, buyers who have maybe gone to a bank or another brokerage or something like that, and they couldn't get it done, and we've been able to do it. So we are definitely have been known as a lender that can save a deal. And it's just a great, we're just a great family network of people that are passionate about what we do. Our biggest thing is about educating. We love to educate people, not just go ahead and do a service for you, but we want to make sure that you understand, what you're getting into. We want you to understand debt to income ratio. We want you to understand why the interest rates are the way they are. um, I'll put in another nugget. Because of the market, the way the market is so volatile these days, and people are all on the fence about purchasing, we have a unique program that's unique to us. It's called a tri-party agreement. And a tri-party agreement is agreement between the seller, the lender, myself, and the buyer. And it's an agreement to where we can structure somebody's loan to where we can get them a below market rate. So with rates being in the sevens and the eights, and people are um, you know, losing it because the rates are so high, and they're like, I don't know if this is a great time to buy. Well, we can do a tri-party agreement where, if long as they can get seller pays or seller concessions, meaning that the seller is giving them um, a credit to go towards buying down that rate. We have actually closed a couple of our deals just in recently in the last 45, 60 days. We've been closing loans in the 5% rate area, which is phenomenal. We're basically able to do what these new builders are doing, where you can get a brand new house and they give you this crazy rate that's in the fives. We can do that also. But you do have to get seller paid. So if there's anybody that's interested in wanting to know more about that program, or if there's anybody who really wants to buy, but they're afraid because of the 7 and the 8% interest rate, let's have a conversation. There's an opportunity here where you could get a rate that's a lot lower than what the market is showing. And we can take a look at that together.
That is awesome. I learn something new every day. That is perfect. um, Dana, she's from Next Gen. She's a real estate investor, already in the game, making a lot of money, got the experience. So we're going to pick her brain on a few things, a few questions that I get asked all the time. Talk about I am an investor in real estate. So how do I get started, and where do I get started? So, and how you doing?
I am great.
So tell us,
Could you repeat the question, please?
oh, tell us a little bit about yourself to start off.
Okay, well, I was born to a military family, so I
Still not
spent,
here.
I'm sorry, I was, my family, I was born in a military family, and after, well, actually before high school, I joined the Air Force. So my background is military and moving a few times. And I retired a few months ago officially, so really excited about that. And so my investment experience is real estate wise has been since 2019. So, how I got started in real estate was that my family, both my mother's side and my father's side, they own their own homes. And my husband, my late husband, before we met, he owned his home. So, except for my parents, I don't believe that they had those 15 or 30-year mortgages that we hear about nowadays. And a lot of my family members were landlords for multiple properties. And my late husband's goal was to own multiple properties and build generational wealth for our daughter. So that was really his dream. And I bought my first home in 1996. And then I bought my first investment property in 2019. Now, the reason why I'm making a distinction about that is because I considered myself a real estate investor when I allocated funds with the expectation of financial gain. So when I purchased my house in 1996, I didn't expect a financial gain. I just wanted a place to live. And when I purchased the house in 2019, I specifically did it for capital gain to invest in the Opportunity Zone program. So that's my story. I'm sticking to it.
So you actually
Well, you're breaking up, but I think I heard you were asking me why did I choose real estate to invest in? Well, that was the fastest way I knew to realize capital gain because that was the goal. And thanks to Holland Homes team, I was able to do that significantly. So big shout out to Holland Homes team. So I didn't own any stock, and I'm not talking about
appreciate
the
that.
thrift savings
Thank
plan, the thrift savings plan or anything like that. And I didn't own any
you.
artwork. So other than the affiliate marketing business I had, which that's a business that you cannot sell, that's why I chose real estate.
Okay. Okay. So a few more questions is one of the big ones is should I operate as an LLC?
Could you repeat the question, please?
Was you able to hear that one?
No.
Should I operate as an LLC?
Okay. A lim a limited liability company is a business structure. Now, an LLC is my preferred way to operate because I wanted to protect my personal assets. So, LLC or a limited liability company is a private limited company. So, it's a structure that I can use to combine pass through taxation of a partnership or sole proprietorship with a limited liability of a corporation. So, I do have a limited liability company, but my Opportunity Zone Fund is a limited partnership. So that's the reason why I specifically chose the limited liability, and that was to protect my assets, my personal assets. So how I started the LLC, or how if someone was to start an LLC, I did it by registering with my state. Now, the state that I'm in, and I'm sure people could go to different states, but I selected where I lived, which was the state of Maryland. They have a um, they have a business friendly um, portal that it took me about 15 minutes to register my business. Now, the reason why now it took me 15 minutes because I read everything. And there's some documents um, in addition to registering with the states that I needed to prepare my business properly. And for you veterans out there is help. For everyone else in the United States, there is the Small Business Administration, which I highly recommend. Whether you're brand spanking new or whether you are a novice or someone that's been in business that wants to hone and do a little bit better, if you will. So there you go.
Technical difficulties. We good now. You able to hear me much better?
Yes, sir.
Okay, good, good, good. Next up, next question will be so I'm an investor. I just got started. How much money should I start with, or estimated amount should I start with to be comfortable becoming a real estate investor?
Now, it's for everybody, it's different. It depends on what your goals are. Now, I initially invested $50,000. Again, it depends on your goals or your risk tolerance. I have a very low risk tolerance. So my advice to would be to only invest money you're willing to lose, and definitely have a complete business plan. Again, if you need help putting together a business plan, there is the Small Business Administration. They actually have an outline, and I think they have counselors that can help you with that. And you don't have to share this business plan with anyone unless you want investors, and you can make the changes as needed. So it's very fluid. You can make adjustments. Now, one of the common elements of the business plan is it's usually the last part. It's called the financial plans and projections, and that's usually where you're going to be putting your financial targets and estimate for your first few years. So that would kind of help gauge whether you're going to be using any of the funds that you have or whether you're going to be having a talk with Jennifer. That's
Okay,
what I have.
absolutely. Can you break down hard money lenders for us? Uh, Always a big topic of discussion. Dealing with hard money lenders. Should I or shouldn't I?
Okay, again, it depends on your risk tolerance. Now, when I talk about risk tolerance and the money that you're investing, you have to be willing to lose it. The hard money lender is not willing to lose money. They're investors as well. So your business plan is going to include the funding requests you're going to make, whether you make them to Jennifer or to whether you go to a hard money lender. So, with a hard money lender, they're going to give you parameters. Everyone is different. I've only dealt with one thus far, and it was a very pleasant experience. The hard money lender I deal with only deals with business entities. So, if you're operating as a sole proprietorship, they're not going to be, you'll have to change the business entity if you want to work with them. So, that's one thing. And the hard money lender, I think I would have to go into the type of property that you're going to be selecting because even though I feel like I'm new to this, I think the very important thing that you want to do is when you're selecting a property or properties, you want to make the money on the purchase, not the eventual sale. And that's where you're going to be able to see from the hard money lender what their parameters are. What their parameters are and what their parameters are and how much you can borrow from them. The terms are usually a little bit different from the banking, but I think the big draw for the hard money lender is that they claim to do it a lot faster.
That what type of property should I be looking at, and what strategies should I be using as far as when we were talking about buying and hold versus buying and selling, uh, renovating the property, pretty much flipping the property versus buying a rental property and holding on to it.
Okay, well, I personally look for a property, again, that I can make money on the purchase and not the sale. For example, I make a practice of not paying more of the appraised value in hopes of renovating and selling at a higher price. If you're dealing with a hard money lender, they're not going to loan you more than the appraised value. And I'm sure that Jennifer could agree with me on this, that a lot of lenders will not lend more than they will that the appraised value. Now, when you're looking at the appraised value, it's as it is right at the time, because a lot of times you're selecting properties that need either renovations or a new house, if you will. So I'm looking for properties that I can make money on the purchase. Now that position works well for me in this climate. I stay away from properties that have been vacant for more than a year, and because they come with their own set of issues. And right now I'm focusing on land and new construction. So hopefully that answered your question.
Yes, it does. Absolutely. Um, I know Jennifer talked about interest only loans in the beginning. When you're in that investor status and you're let's say you've already got the property, well, you haven't closed on it yet. I put it that way. You haven't closed on the property yet. When they're talking about interest rates, paying interest only loans, and the time amount allotted to you to pay that loan back, what are how do you negotiate that with these hard money lenders or different entities that you're getting the money from?
I usually know what the interest rate and what the terms and conditions are going to be before I actually come to closing. It's not a surprise. And I do negotiate with the hard money lenders. Usually, the negotiation position that helps me would be experience, my credit score, um, the team that I have that I'm working with, how experienced are they? And that's why it's so important to have a business plan, because that helps you navigate when they're asking you the questions to see if what their terms and conditions makes sense for your project. Read everything, all of the documents before you sign and commit to anything. And I know that some people do take documents to their attorneys for them to read. Definitely read it for yourself, and just know that the lender is the author of that agreement. They're going to write it to their benefit and to protect themselves. Of course, like I said, changes can be made, and if not, walk away. And Damon, you know I've walked away.
Absolutely, absolutely. And I do want to point out that you have said business plan a lot. So I want to point out for the people at home listening, if this was a drinking game, we'd probably all be feeling good how many times you said business plan. So that is definitely a key to have your business plan uh, already. And keep in mind, your business plan is a working document. It's going to change as you from start to beginning. It's going to change in the middle. but it's a structure. That's the key point. It's a structure. You're not flying blind at all. So business plan. That's a big one.
Yeah, yes, sir.
Um, I'll go ahead.
Yeah, yes, sir. And I was going to say that a lot of times, especially if you're asking for someone to invest with you, investors do work with other investors. One of the things they're going to ask you are either one, do you have a business plan? Or two, some of the questions that you have would actually be answered in the business plan. And if you're not answering those information, if you're not answering correctly, you're probably not going to get that investor. Take another drink.
Absolutely. Great point. Great point. Like you said, we are a lot of people. There are a lot of friends that jump in these things together. But friends are friends, and business is business. It's always good to have that structure and be able to say, "Hey, here you go. This is the plan. Now let's talk about the plan." That puts everybody on the same sheet of music, puts everybody at ease a little, um, and everybody's a little bit more comfortable on the outlook of going into different things. So that is we're kind of at the end of the questions that were sent in, the questions that we do have, but I do want to say, Dana, what are you working on right now? What do you and also what's up next for you?
Well, one of the questions that was asked of me was what were the benefits, or I think they were asking the benefits of buying and holding or flipping. And flip is my four-letter F word, right? So I tell
Yeah.
them that it depends. Now, there are benefits to both. So, as an opportunity zone funds manager and investor, I purchase, substantially improve, and hold the properties for at least 10 years. That's the program. So my 2019 purchase required me to do a flip. And so, well, what do we mean when we say flip? Okay, so flipping is a strategy, a real estate strategy that you buy the homes, you renovate them, and then you sell them for a profit in a short period of time. So my 2019 purchase was buying it, renovating it, and then selling it as quickly as I can. So the key is to buy low, remember, and to sell high, which is a contrast to the buy and hold strategy because it's important to complete the transaction as quickly as possible. That way, you're limiting your risk of capital. And you're like, well, what risk are you talking about? Because the focus of the flip, if you will, is to maximize profit. But you're not maximizing profit. As each day goes by, you're going to be paying more money in mortgage, if that's applicable, or if you have utilities, property taxes, insurance, or any other costs associated with home ownership. Now, the reason why I don't care for the word flip is because there was some negative connotations with it. Because remember, they're purchasing it, renovating it, and selling it as quickly as possible. And a lot of times, people were taking what they call shortcuts to where a lot of the renovations, quote, were not passing code. So that's why, and I'm sharing this information for you investors out there. And this is in the state of Maryland. I don't know about the other states, but a lot of the government agencies were holding the bag with homes that were not up to code or not livable because the person that purchased it, quote, renovated it and sold it, they were not livable after a period of time. So this is a strategy that you have to make a conscious effort to get the right team. So that's why I say the realtor and Damon is also an investor. So Holland Homes team understood what I was trying to do. I just didn't want to slap a coat of paint on it and sell it. We actually wanted to get a good quality product out. At the same time, I'm maximizing my capital by not having the home unoccupied for a period of time, turning around and getting it sold. So, what I'm doing right now, the next gen team in the opportunity zone, we are we do have a rental that we are getting cash flow from, and we're also selling. Well, not next. Well, next gen is also selling a property, some land, and I guess I could put that in the description. So, my focus is to increase the um, the Opportunity Zone Fund and to actually work with the team to look at other investments. So that's what we're doing right now, sir.
Appreciate that. Thank you. Thank you. We want to ask Jennifer the same thing. What do you have upcoming next? Anything we need to be on the lookout for from coming from you? Okay, we'll get back to that. But again, want to thank you for tuning in. We just wanted to share some information with you today. We have more to follow, more to come. It's always good talking with Dana from Dana from the Next Gen team. Information will be in the description below. All the contact information will be in the description below and after the video. So please, if you have any more questions, you can definitely contact myself, Jennifer, or Dana. You can also check out our different videos on the in the YouTube. In the YouTube, you can also we have different videos on different topics, different subjects, more buyer seminars, like I mentioned earlier, talk about sellers. We talk about the opportunity zone. That's a big one. Dana mentioned the opportunity zone. So if that's your first time hearing it, definitely check out the videos on the opportunity zones. We have videos for the business plan. We said that a couple of times. These keywords that we were saying in there, we I'm 100% sure we have a video on them specifically for that topic. So definitely check us out on YouTube, like and subscribe. And Dana, I'll leave you with the final words.
Yes, thank you, Holland's Homes team. Thank you, Damon. Thank you, Jennifer, for allowing me to share my story. And for those of you, as Damon said, are looking at this live stream after we have ended. If you have any questions specifically for the Holland's Home team or Jennifer Spigner, please look at the information that we're providing in the description and contact them directly. You don't need to put the questions in the you don't need to put the questions in the comment section. If you have something specific that is specific to your situation, please contact them. Thank you very much, everyone. And for my panel guests, please stand by while we end the stream. Everyone have a fantastic weekend and happy Thanksgiving.